Welcome, guys, back to the Grateful Living podcast. Today, I'm thankful to have Atin Batra with me. Atin is the founder and general partner at 27 Ventures, a global VC fund that invests in EdTech and the future of work startups. Before that, he was a principal at the hardware-focused VC firm QVP Partners. He continues to be involved with the amazing team at QVP in the role of venture partner. Atin, thank you so much for joining us.
No, thank you for having me, Arnav.
Of course.
Good to be here.
Thankful to have you on. So for people that don't know you as well, can you kind of give us an introduction on your beginnings, where you grew up, your family situation, maybe what type of kid you were, things like that?
Yeah. So I was born and brought up in India, actually. Very, normal middle-class family. Both my parents used to work for the government, who used to work for national organizations back home in India. Studied in India, did my MBA there, and then ended up working for a media newspaper, for a media conglomerate, actually. So I was working for the business newspaper as part of the media conglomerate in India. Did that for a couple of years, and then sort of had this entrepreneurial bug catch me and bite me, and then decided to leave that and become an entrepreneur. And this sort of leads from, who I was as a kid, which is one of the other things that you were asking. I was always, I wasn't a bad student, but it was just, I was never really interested in what was happening in class. And so I spent really most of my time outside of class, either organizing events. Not that I was a vagabond, sometimes I'm cutting class, but I was looking for, as we used to call it, official reasons for cutting class, whether that was, organizing events, performing theater, playing sports, whatever. So just always looking for opportunities that I could grab to get out of class. But that wasn't, it wasn't because I wasn't a good student or whatever. It was just I didn't really enjoy the kind of education that was being imparted. And this is actually part of my thesis today, which is, a lot of what I learned was sort of garnered by living life in general. And so I call it the whole experiential learning movement. But it's by just doing things you learn much more than if somebody was teaching you. And so that's always been my philosophy, and I saw that in my own time as a student, both in school as well as at university. Same thing at university. I was heavily involved in theater. I used to organize a flagship event for a nonprofit around the MUN format, which, this was 15 years ago, mind you. Like there were 2 MUN conferences in all of India, and we were one of them, and we were the only ones that were being organized by a student organization. And so that's really where I got my start for, building things up from scratch. That sort of was the tangent that, when after having worked for this media conglomerate, I figured, well, I could build things on my own. So why don't I just build my own business? That's where I got started. Didn't really work very well. I moved to Hong Kong to start the business because I had some initial clients here. It wasn't a tech startup. It was an agency, marketing agency. I did that, came to Hong Kong for that, built the business, built the team. Wasn't enjoying it, wasn't really what I was looking for. And then I got the opportunity to actually move over to the investor side. And so now, almost 8 years ago, I was hired as the head of a corporate accelerator at one of the largest corporates in Hong Kong. It's a 200-year-old conglomerate. So I actually joined them, did that for a year, and then joined QVP, which is the other organization you mentioned in your intro. Joined them as an associate, then a principal, worked with them over 3 years. Sort of really got to know not only what investing means, and full credit to the folks there, to the GPs who are great friends of mine even today. But I learned what investing meant, how you could actually do that, but also just what building an investment firm means. And those are 2 very different things. But in any case, so that experience was instrumental. And then in 2019, sort of got a hankering once again to do something of my own. And this time around was going to be in investing because that's what I'd been doing, and I enjoyed that. And so in 2019, sort of formed 27B as my own VC firm to invest in education, future work. That's where we are today. Sorry for the long-winded answer, but that's the story.
No, that was great. So, I saw you did your BCom in commerce, business, and
Yeah.
economics.
Yep.
Given where you are today, right? There's a lot of 18 to 22-year-olds that might want to start, a venture capital firm
Yeah.
at 40 or whatnot. Can you just, was like mindset wise, is there anything that you would look back on from your college experience and impart to a current undergrad?
Yeah. I mean, again, I said this in my intro, which is a lot of the skills that I use today I actually did not learn in the classroom or from whatever major I was pursuing. It was because of all of the things that I did outside of class. And so maybe I'll dive into one of those experiences. As I was mentioning earlier, we used to work for this nonprofit. Um, uh, Actually, I tell you the entire story, but when I was an undergrad freshman, I met this woman who was a very beautiful woman, and I wanted to spend more time with her. Like, as how most stories start, that's where it started. I wanted to spend more time with her. She had been running, and she had founded and was running a nonprofit, which was focused on organizing public speaking, soft skill training events for young adults. The twist was that the events were organized also by high school students. And so it was almost like they used to call it by the students for the students of the students. And so the idea was that not only would you learn if you were participating in the events, but you would also learn a ton of skills if you were organizing the events. And I mean, as someone who loved organizing events and doing things on my own, like that really attracted me. And the whole idea of providing agency to students, right? To, these 14, 15, 16-year-olds, giving them that power of making decisions in such a scenario was just very appealing to me. And so I ended up joining the organization. We established the MUN format, which was the flagship event for them. We did it 3 years, over 3 years consecutively. We had 1,800 students participate from across the country. And we raised over $100,000 US in sponsorship. We raised over $100,000 US in participation fees. And the best part was that our team, which was almost like 60, 70 people, a rotating crew of people, but all of them were under the age of 16. All, like every single one of them was a high school student. The eldest people were the founder, this woman that I'm referring to, and myself. I was 17 myself. I was 18 when I did, and she was also 18 or 19. She was a year older than me. And so the idea was that, to be able to put together an event at the national scale where we had people flying in from all over India, from even outside of India. Actually, we had a couple of participants from outside of India, to have them come to us and then manage their lodging, boarding for 4 days, all of the substantive, aspects of MUN, the branding, marketing, sponsorships, all of that stuff was being done by 15, 16-year-olds. And it was just an amazing experience for me to learn, but also for the entire team to actually learn these kinds of skills. And those skills I'm using today. So when I'm raising a fund, I'm doing fundraising. That's exactly what I did when I was asking for sponsorship. When I'm actually talking to my portfolio companies, I'm giving them advice, sort of leading, coaching. That's exactly what I did with a team of 60 people that I was leading back then. When I'm actually doing all of the financial management of the firm or helping my portfolio companies with financial management, that's because I had a balance sheet effectively of $200,000 US at the age of 17 that I had to manage because I was the senior person of that group, right? All of those skills that I'm using today, I can trace back to that experience. Fun side fact, by the way, that woman is now my wife and the mother of our child. So the story ends well. But that's my advice to people, is just find what you're passionate about. Find something that you can do in the real world. Not to offer any offense to any of the education institutions, but they are a little bit of a bubble. So my advice is find stuff that you can do in the real world. And those activities will give you the actual skills that you can use when you enter the professional world.
Yeah. No, that's great advice, to experience actual organization and event planning and all that.
Yeah, I mean, it doesn't have to be event planning. Now I know so many people who are starting businesses when they're in university, which is great. Like that's exactly what you should do. Start a business, but start a business that sells to customers outside of the campus, because the campus, once again, like is a bubble. There's only, there's so much. I know with all of the diversity and everything, it's not the same anymore, but there's still a lot of homogeneity within a campus, within a student body. And so what you really want is the perspective, the diversity of perspective. So go, build a business, but build a business that sells to people outside of campus. And then you'll actually figure out what the real world wants, what the real customer wants.
Yeah, no, that's great advice. This is a similar question, so we can move forward if there's nothing else to add. But again, you did your MBA right after your BCom. Is there any part of that as you look back that you were like, oh, I'm glad I did this and it's been useful years later into my professional career?
I mean, once again, my answer is going to be, there is an answer. I'll give you the answer, but it's not going to have anything to do with the major or anything that was happening in class, right? So when I got to my MBA, my B school, they had a community radio station. And I'd always been fascinated with radio. I've got a face for radio, as they say. So I've always wanted to do radio. And I got there and I got really involved with that. So when I got there, the radio station, and so this is again one of those things where you're just thinking up new things, right? And this kind of creative thinking is going to help you in professional life. But when I got there, the radio station used to basically just broadcast students reading stories. So like these MBA students would just read physical books on the air, and then they would broadcast that, and that's it. Right? That was the entirety of their programming. When I got there, I was just thinking of what can we do differently. And this was just the time when people had started thinking about streaming and live coverage and those kinds of things. And we ended up creating a program where we would basically do live coverage or streaming of college events. Mm. And so essentially, any college, the most vivacious time is basically when you've got all of these events happening, when you've got like a sports festival or a management festival or whatever. And so we actually ended up partnering with the committees that were organizing those events and said, we'll do it for free. We don't want any money. But what we'd like to do is just give you this live coverage of your event. And so essentially what would happen is that during those 3 days of the sports festival, for example, was happening, we would be live 24 hours. And they ended up putting small transistors connected to large speakers at different points of the campus. And so our job was essentially to announce events, to give live commentary of a basketball match, live commentary of a cricket match, share scores and share announcements of, here's the event that's happening now, why don't you go and attend it? We ended up actually finding, again, advertisers. Like there were sponsors for the main event, but then we had advertisers for our radio coverage of that main event. It was just like crazy. It just snowballed from there. We had jingles. We had a musical team actually come in and create custom jingles for the event. And it's just like putting that entire thing together. How do you do scheduling? You want to cover for 24 hours. You've got to have a rotating crew. So how do you do scheduling? How do you ask for sponsorship? How do you actually come up with these creative ideas of creating jingles and creating marketing materials and those kinds of things? And we put that entire thing together so much so that it works still today. People are still running that event in much the same format today. It's almost been 10 years since I left B school. But it's like one of those things that completely changed the face of that radio station, but also just the face of how people perceive the radio station, how people perceive events, and the combination of that. And like all of those skills I learned putting that together and coming up with those ideas completely applied today. Like I use that every single day in my day-to-day work. So once again, just find something that you want to do that's outside of class. Don't get stuck in that box of the classroom early.
Yeah, no, that's great advice. So after that, you were at the Economic Times as an assistant brand manager.
Yeah.
I guess, are there any lessons from that experience that you look back on?
Yeah, I mean, maybe I'll make your job easier. I'll just go through the lessons through my career, like
Yeah, yeah, yeah.
different positions. But my first job was at the Economic Times, which is part of this 200-year-old, actually 250-year-old conglomerate in India. They were an old school organization. They are an old school organization, and I was this hotshot, or at least what I thought I was, a hotshot 18-year-old. Actually, no, I was 20-year-old when I joined them. 20-year-old who joined them, and essentially wanted to revolutionize, how they were doing everything, which is a huge mistake. So I guess my number one lesson from that experience was, first of all, when you join any organization, give yourself time to first understand what is unique about the organization, how the organization operates, how they function, and what are the things that you can actually learn from that? What are the things that you can assimilate from that experience? I think when I was a young executive, I definitely underestimated the power of industrial knowledge, or institutional knowledge, actually, I should call it, not industrial, institutional knowledge. There is a lot of best practices that are built through an organization and just having worked for hundreds of years. And you shouldn't really dismiss all of that. So anyway, so like I was saying, my first mistake was just sort of thinking that I would change everything as I entered this organization, but I learned very quickly that wasn't going to happen. The idea was to try and understand what they were doing, what were their best practices, what were their processes, and then start to tweak some of them where I saw fit and where I was able to push. And the other thing about working in large institutions, or any kind of institutions, even if it's a small startup, 10 people, is there will always be an established culture, and you can push, and there's always going to be a push and pull. You can push on certain aspects, but you won't be able to on others. So the idea is to figure out where you can win those battles and make things better for the organization. Because today, now looking back, I think of those things as legacy of what I left for that organization. So whether that was the nonprofit that I was talking about in undergrad, like the legacy I left for them was this idea of just, 70 people getting together, 70 high school students getting together and building something on their own. And so many of those people today are entrepreneurs themselves, or are actually working for the UN, which just gives me like immense joy when I see that. But it's that exposure, right? So leaving that legacy, right? When at B school, I left the legacy of actually having changed the radio station that works still today in that way that I was able to build for them 10 years later, right? The world's changed so much since then, but it still works. Same thing with the Economic Times. The first job that I did, I was able to help them think differently about social media, because that's what digital media in general, because that's what when I came in, I was a 20-year-old, I was the youngest. I probably had the most experience with social media and digital media, and I was able to actually guide them and advise on how to actually change their strategy when looking at digital media strategies. And those things work till today. Like that formed the foundation of how that organization works today. And so every time that I've been thinking about these things, I'm now thinking about it from a legacy perspective. What did I leave behind that was additive to the company's culture, that was additive to the company's operations? So yeah, my lesson from my two lessons from working at Economic Times: one, do not underestimate institutional knowledge. Give it the time and the space to sort of come to you, and you learn from it. The second thing was just try and think of, and that was the first time that I sort of thought of it in a systems perspective, but try and think of ways to be additive to an organization such that even after you're gone, it will continue to be a foundation for them to build on. And so that's what I did at the Economic Times. And that, as I was doing that then led me to start my own company, because, and this is the other mistake, is thinking that I can do everything on my own, thinking that I could do things better. And my learning from having started that company was actually just one, which is strange when I say this, because I completely ignored that insight, but later in life. But the learning was actually to, if you can, don't start anything all by yourself. it is very important. And sometimes, I mean, like I was a solo founder, I still am a solo founder, which is why I said that I ignored my own lessons. But my advice to anybody is always start with a co-founder, at least the very first company that you're building, because you really need that support. And yes, you can have support in terms of friends and family, but none of them are going to be as invested in the business as actually having a co-founder. And so my advice is definitely when you start your first company, and you may choose to do it differently in the future, but when you start your first company, find a co-founder, because you'll learn so much about the way you work through that dynamic. You'll learn so much about the way you work with other people through that dynamic. You'll get the support that you need. You know, sometimes things aren't going well and all you need is somebody else to either whine with or somebody just to scream at and take out your frustration and vent, and all of that is helpful. So anyway, so my lesson from the entrepreneurial, my first go around at the entrepreneurial journey was never do things alone. Find people to sort of partner up with, buddy up with, because that will always help.
Yeah, I have two questions. The first one is, how can established organizations like the Economic Times be more nimble or keep, younger employees more satisfied, and or what I'm saying? Is it about experimenting more and being
sure
a little bit more out of the box, or do you have I don't know, that's a tough question.
That's okay. I have an answer. You had a second question. What was your second question?
Why don't you do that one first?
I'll do that. Okay. First of all, I don't think the Economic Times is ever going to change. So that's it. Like that's that organization is just a complete generation apart. So that's never going to happen. But in response to your question, I did have the opportunity to work with another 200-year-old conglomerate here in Hong Kong called the Swire Group. And I worked with them also when I was leading the corporate accelerator. And that company I actually think of as an example for how they were able to make that transition, like you were saying, to actually being more nimble, to being able to retain young employees. Because I think what they realized was that the best way to keep people engaged is one, to actually always have movement, right? Like motion. And I think that's something that a lot of old companies sort of forget. When they're thinking of operations, they're always trying to figure out what's a way to stabilize an operation or stabilize a process, which is fine, which is probably how it should be. Yes. But there should always be enough scope for evolution, for iteration, right? And I think what the problem that a lot of old organizations or established organizations, the trap that they fall into is that once they've established a process, they think this is the best that will ever be, and I never want to change it. But the real innovative ones, or the real game-changing enterprises, they realize that this process works today, but tomorrow we will have to iterate on it. So use it as a foundation. And that's what I learned from the Swire Group was they figured out the way to have processes. I mean, they've also been around for 200 years. They own a bunch of businesses. They own Cathay Pacific. They own like 3 airlines. They have established processes, but they have the executives have the freedom to iterate on those processes. As long as they're making it better, they are given the rope to do that. And I think that's the number one thing that people have to think about when they're in an established organization and in a leadership position. And that actually is what helps retain the young employees, because now suddenly if I'm a young employee, like again, every 20-year-old thinks that they're a hotshot and when they join an organization, but when they see that the organization is moving forward, that there is change happening, then they get even more excited to contribute to that change, rather than when they're faced with this wall that says nothing is going to change. And then they usually, because they're a hotshot, they think they're a hotshot, they're going to try and chip at the wall, but it's not going to work. Yeah. And that's when they get disillusioned and leave. So yeah, like in my mind, there's only one advice I can give, which is build the processes, but always build enough scope for movement, for motion, for some kind of iteration. That's in many ways, I mean, that is true of the startups also, but like startups, I think essentially are just always going to be a company in in movement, in iteration.
Yeah.
So there's really nothing you can do with that. I mean, that's really truly part of their culture, which is why people love working for them, right? And that's the lesson that some of the established organizations can sort of learn from a young nimble startup.
Yeah. The other question I had was, I mean, you're pretty young in your career at that time to start your own venture. As you look back on that, is there pieces of advice that you would recommend entrepreneurs? Like, did you start a marketing agency on the side? Did you save money, or, how did
Yeah.
you formulate, or as you look back, how would you recommend formulating, starting your own venture?
Yeah. I mean, I actually did all of those things. So first of all, I have to say that I had the privilege of a family that was supporting me, and that I did not that I not that I took money from them, but at least I knew that I had that safety net, and that is definitely a privilege, 100%. I completely accept that and appreciate it. But having said that, before I actually jumped into the company, into working full time on the company, I'd been working part time on that for, I don't know, like 6 months. Actually, even more. I think almost a year. Actually, I spent almost a year while I was working at the Economic Times, at that organization, working nights and weekends on this other company of my own. So it was a side project for a long time. And the advice that I always give is like, build side projects. And then when those side projects get so cumbersome that you really have to devote full time, that's when you know you want to make a switch. But until then, just keep doing it on the side. So 100%, I support that. I actually think that's great advice, because not only does it help you figure out what you really truly want to do, because sometimes there are side projects that you begin and you realize that you don't really have any passion for them beyond a superficial level, and so they fall by the wayside, which is perfectly fine, especially if you do have a full-time job. That's okay. And then the second thing is that the idea of having side projects is that you actually give them time to develop into revenue generating or full-time operating businesses. And at that point, then it makes sense to leave your otherwise established safe job. So yeah, definitely recommend doing the side project. I think the other thing that I would recommend, other than, one I already mentioned earlier, which is find a co-founder. But the other thing that I would recommend is try and think about I think it's fashionable these days to think about just venture capital money and the fact that money is there and you can just go out and raise. But in my mind, and I've been saying this a lot for the last couple of years, but if you're building a company, you're in the business of business. And so my advice to everybody starting their own company is figure out how to make it a business. How do you earn money? How do you earn revenue? How do you make profit out of that? Because if you don't have that mindset from day one of actually making this a revenue generating business, you're just digging a hole for yourself. And then you actually raise the venture capital money and the hole gets deeper. And then you raise more venture capital money and the hole gets even deeper. And then it's going to get really difficult for you to climb out of that if you don't really have the plan right from day one. So figure out how to make your company a revenue generating business. That is what is most important. That is what is going to sort of help you navigate all of the ups and downs of startup life. Look at what's happening today. Like in this macro environment where funding has fallen, VCs are pulling back on actually making investments. The only companies that are getting money today are those that can actually produce cash, like literally churn out revenue day after day after day. They are the kings of this market. And that's the thing. People like me, I include myself in this, but people who've been working for the last 15 years have only seen boom times. They haven't seen bust. And that's just changed the mindset of wanting revenue businesses. Yet they think that they can just go and raise venture capital money. And that's just the wrong mindset to have. So anyway, so again, anybody starting today, my recommendation is find a business model. How do you make money? How do you generate revenue? That's what is important.
Yeah. During that time, you changed from New Delhi to Hong Kong. Obviously, years later, you stayed in Hong Kong. Yeah. You want to talk a little bit about that transition?
Well, again, so I have the privilege of having family here in Hong Kong. So it was in it was an easier transition for me than for most other people. I could imagine making that. But it was interesting. It was a completely different culture. It was a completely different mindset. Also, I was moving from working in a corporate to actually starting my own company. So essentially, I was moving into the startup space, and so there's cultural differences even in that. The way that I got going, and that's my advice to anyone else, is I got going by actually joining a community of startup events here in Hong Kong. In fact, I was one of the first directors for Startup Grind in Hong Kong, which was an international event series. So I actually helped them launch in Hong Kong. And for me, because I loved organizing events, it was a very natural thing to do. But I think for anybody else, like, just go attend events, go build a network, give yourself, once again, give yourself the time and the space to actually build connections, because once you do that, then they'll come to fruition. They'll give you benefits that you just can't even think about that. And that's what was really helpful in the first couple of months for me. Was I started organizing these events, and so I had to meet the venue guys, I had to meet the speakers, I had to figure out who I should invite to come and organize, or come and help me organize, or come and attend. And so just through that process, I was able to meet basically everybody in the startup ecosystem. And now people call me one of the grandfathers of startup ecosystem, which is horrible because, well, I'm just over 30, but I've been in the Hong Kong system for about 10 years. And I was one of the first ones sort of making a movement in this space with the event series, right? So yeah, it's like, that's what I would recommend. Just give yourself space to build network, build connections whenever you move to any new place, or even when you move, like I said, from corporate to startup land. Just figure out a way to build those connections first.
Yeah. December of 2014, it was a big thing happened in your life. You got married. You talked a little bit about, you guys meeting young. A lot of people nowadays, kind of are in the mode of, focusing strictly on their professional life, because they want to maximize that first. Just curious, any advice you have, on love and marriage and that whole process?
I have none, and the reason is, I think we've just had a very atypical relationship. Like, I've had lots of people ask us about this, but it's just that, we met when we were 17-year-olds. For the first 3 years when we were building that nonprofit, we spent essentially 16 hours a day together, right? And that's very atypical. I don't think anybody else will. Like, it's very, very difficult to find yourself in a situation where that sort of happens for you. And so I honestly don't have any advice, because like, everything that happened to me has been completely different. I think the only lesson that I will share, which might be applicable to other people, is just sort of keeping yourself open to new experiences. Like, if I hadn't thought about joining this organization, or if I hadn't sort of thought about asking this person to be my friend, like, none of this would have happened. I mean, I've known that person. I've been with my wife. We've been going on for 15 years now. I think we're getting to that point where I've known her longer than I've not known her, right? Like, that's ridiculous when you think about it. So yeah, it's just be open to new experiences, I guess, is the only lesson that I think would apply to most people. Yeah, that's that.
Yeah, that's awesome. And so after that, you talked a little bit about Swire. Then, you went to QVP Partners, as you talked about, from an associate to principal to venture partner. I guess, maybe the first question most people would ask is, how did you obtain a position like that? Was that through networking, or how did that process go?
Yeah, networking. And I said this earlier, like, you have to figure out a way to build your connection, build your network. And I had met the two GPs at QVP. actually I met one of the GPs like years before even they had thought about starting their firm, to be honest, right? Like they had that idea much after I met them, and we just had built a relationship and a friendship. And then Henry is his name, but Henry came up with the idea to start the fund, and he started asking his friends, like people he knew who he could hire. And he asked me, and I said, well, why don't you hire me? And we ended up going through that process. And so, yeah, again, like it's just pure network. I think it's the, what's the right way to put it? I think it's the, it's both sides of the coin, right? Like in many ways, it restricts access to the venture capital world because you end up getting most of your positions through network. However, also in many ways, it increases access, at least in my mind, because anybody can build a network. You can go to all of these events and build that relationship. Like that's what I did. I never went to any Ivy League. I wasn't even in Hong Kong. I didn't study in Hong Kong. I just come to Hong Kong. I was completely new to the space. Because I built that relationship and that network without actually wanting anything in return at the very beginning, I was able to get to the point where somebody offered me a job in a space that was completely foreign to me. So I think I understand when people say that getting jobs only through networking or through friendships restricts access to people. And it does, completely accept that. But also it opens up access to a lot more people, right? Like if I'm just asking you to send me a CV, and if the CV doesn't have Harvard, I would reject you, is probably a worse thing for you from an access perspective than if you and I meet in person or through virtual, whatever means, and we hit it off in a relationship, then I don't know whether you went to Ivy League or not, and I don't really care. And so I think it works both ways, and that certainly worked for me.
Yeah. I guess, how you talked in the intro about you learned about building an investment firm from your time there. Do you want to talk more about what you meant by that?
Yeah. I mean, I think like once again, I got lucky. This is a recurring theme in life for me, at least. But I got lucky a couple of times. But I got lucky that Henry, this friend of mine, was starting a new firm, and he thought of me to join him, because I could have gone and joined I don't know if somebody would have hired me, but I could have probably gone and joined an established firm, and then I would have to learn all the processes that they already had built. Whereas working with Henry and his co-founder, they were building a new firm. I was able to help them build a new firm from scratch. So that to me was a formative experience. I'd say that the second most formative experience for me, the first one being the nonprofit back in undergrad, but the second most formative experience for me, because I was able to build an investment firm from scratch with these guys. I was able to follow their lead. Henry and Larry, the other co-founder, they obviously have like 15 years on me from a professional experience perspective. They've been around much longer, even though they had not built a firm themselves, an investment firm themselves, but they'd worked for publicly listed companies. They'd worked for large corporates. They'd built their own businesses. They had a lot of experience from all of their other activities that they were able to bring to the process of building the investment firm and pass on to me. And between the three of us, we learned as a group how to build the firm from scratch. And that was just, oh man, it was so much fun. Like it was so much fun. In the first year of joining QVP, it was a shit ton of fun to actually build every single thing from scratch. I remember Henry and I we had this, it was an informal thing, but essentially it was this lunchtime where both of us would have lunch together deliberately, right? Like I think there are a lot of people who choose to go sit by themselves or do whatever. We chose to sit together deliberately and just shared knowledge, like shared lessons, shared what we had listened to on a podcast, shared what we had read in a book. And those were amazing times for me. Like I still fondly remember having, those lunches with him and sitting and just talking. Not all of it was work related. Like I learned a lot of life lessons from him, but some of it was applicable to work. We ended up actually brainstorming so many things through that process. that experience of learning again, like how to build something from scratch was just crazy. And this is what I was saying earlier, right? Like, or maybe I should rephrase what I was saying earlier. Earlier, I said that you should go and find something, a side project, something to do outside of class, something to do outside of what your day-to-day thing is. But also, I would say find something to build, right? Not just find like a side project, somebody else is building a company, you can work for them part-time. Sure, that you can do that. But if that is possible, if you have the resources to do so, start something of your own. It could be an event series, it could be a newsletter, it could be, I don't know, like a community on Slack, on Discord, or whatever. It could be a company. Like, to me, the most important experience as a whole, as a format, was starting things from scratch. That actually made me learn so much more than if I had just joined someone else who was already building something. So that just the experience with QVP just solidified that thesis of mine, which is entrepreneurship really, like, truly is the greatest gift that any human being can have.
Yeah. I'm curious, for anybody trying to start, maybe a connected hardware startup, from your time, is there any advice that you would give them?
I mean, I have advice for like startups in general. It doesn't have to be just connected hardware or education or whatever. But I think, like, generally, some of the things that I've already mentioned, like, find a co-founder. I always say that, find a co-founder. At least for your first entrepreneurial journey, find a co-founder. For your second, third, you can choose to do it by yourself because you will have learned enough of lessons. The second thing is, again, what I mentioned earlier, build a business. Like, it has to be revenue generating. Come on, let's just make that a core tenet of whenever somebody's building a business, is build a business, build a revenue generating business, right? I think that and then another thing that I mentioned already is just build that network, because that will come in handy in so many ways that you can't even imagine today, right? But the only other thing that I will add to those three lessons, from somebody starting a startup in any sector, is find a sector that you have a unique edge on. Right, I think a lot of people usually are technologists. So all of the phrases, that the cliche phrases that you've heard, a hammer looking for a nail, a technologist looking for a solution for a problem to fit his or her solution in. Like, that's the problem with how a lot of startups are built today. Is people come up with an idea, a solution first, and then go find a problem to retrofit it to. Which is what I mean. Like, find a sector, an idea, a product that you have an edge with, which is most usually going to be something that you've actually worked on yourself for years and years and years. So, which is why the most successful founders you see are, people with decades of experience in this sector that they've now decided to start a new company in, because they saw all of the pain points and know exactly what to solve. So yeah, just find what makes you unique in this space, because trust me, you're not going to be the only person building a company or even building this product. Like, there will always be others, and maybe you were the only one when you started, but now that somebody else will see the idea, they're going to figure out a way to do it themselves. So there will always be competitors in the space, in the niche, in the product, whatever. Find what makes you unique. I think that's the most important.
Yeah. Then October of 2019, you start 27 Ventures.
Yeah.
Again, how did you think about this idea? How do you maybe go about starting a venture capital firm? Do you want to talk about those two aspects?
I mean, once again, like, going back to my experience of starting my first company, I ended up doing that as a side project for 12 months, right? Same thing with 27D. I ended up doing this as a side project for 6 months. Early in 2021, I actually came up with, I had this flash idea, I guess, of like, why don't I start my own firm? Because I want to invest in a certain kind of company. I want to invest at a certain stage, which QVP wasn't doing. And I couldn't find anybody else that was really, truly doing that. And so I spent 6 months sort of going through the process of creating my thesis, writing documents, pitching people, asking for money, raising the fund, until I had that fund. And that's when I actually quit QVP and started working full time on 27B. So again, that whole idea of building a side project from just that's always going to be important. But I think the other thing was with 27B was and when I was mentioning earlier, like what's unique, what's the edge? That was like I found this thing that I thought that was unique, and I know that we're still unique in that sense because we invest in education, we invest in pre-seed. There are probably only 6 or 7 firms in the world who do that, and so once I found that there was an edge, and that I was only competing with 6 or 7 other firms, I decided that's what I wanted to do because I loved education. I've always been in the education sphere I just gave you the entire story 15 years ago, but that was always a passion for me. So, that's how 27B got formed.
Yeah. The fund, raising the fund, setting the goal for that, and I guess then going out and, going to your network and asking them, I'm sure it was tough because it changes the dynamics of your relationship with certain people.
Yeah.
Maybe you're asking friends to now add on a business relationship with you. Do you want to talk about that process and how you went about that?
Yeah, I mean, once again, it was pretty atypical for me. I know that there are fund managers, lots of my friends who spend. My son's just waving at me. We've like I know a lot of fund manager friends who spend like 18 months raising their first couple of million. I had a slightly atypical experience again, as I was saying, because I had a friend or mentor, actually, I should say, who believed in me and decided to actually just give me the opportunity to build by actually committing very early. And then just with that commitment, I was able to put together the first couple of million for the fund within like 6 months. We even come up with the idea. That was atypical. I would say that 100%. It's very difficult to actually find somebody else who would say that happened for them. Especially if like they've got my kind of background. So if I never worked in big tech, never went to an Ivy League, I think people who have some of those things on their CV are probably definitely can raise within 6 months, but not someone like me. And so I think when you talk about changing the dynamics of friend relationships, family relationships, business relationships, I would first of all certainly recommend not doing that. Having money sort of come between friends and family is just a nightmare. You can, of course, lots of people do friends and family rounds for companies, for funds, and you should do that. But always figure out what's the amount of money that your friend family wouldn't miss, and just keep your asks within that amount, so that there are no there are no regrets and spoil relationships afterwards. But when you're thinking about raising capital for either a fund or in a company from within your first degree, second degree network, think more about the people that you've actually had working relationships with, not friends, family. Like think about people you've had working relationships with, people that actually know how you operate, how you function, who can then essentially vouch for you when they actually invest in you. Not only are they vouching for you as an individual, they're also vouching for you as an executive, as a professional, because they've had that working experience with you. So that's my recommendation, actually, is if you're looking to raise capital, find people you work with. Find people who have sort of a perspective of you, not only as an individual person, but actually as an operator, because their valuation actually means just a little bit more.
Yeah. I guess, for you now, you probably receive, a good amount of submissions.
Way too many.
Yeah. So, any advice to entrepreneurs that are pitching VCs and, how to stand out?
Sure. I mean, very early on when I was building this firm, I actually created what is an operating manual for our firm. And in fact, it's public. Like if you actually go to our website, you'll be able to find the operating manual. It's publicly available. And in that, there is a section that I talk about do's and don'ts for startups that are pitching investors. That some of the don'ts, first of all, don't use formal language. Don't tell me that you're going to close around by Friday. Send me an email on Tuesday saying, are you interested? If that's the first time that you're ever emailing, even if that's not the first time you're ever emailing me, essentially, even if I know a founder for years, if they tell me that they're closing in 3 days and that I have to give them a decision, the decision is always going to be no. At least that's how I operate. Like it's just never going to work. Another don't is don't tell me that this is a $1 billion opportunity and I'd be a fool for missing out. Like I have literally received that language saying you would be a fool because this is a $1 billion opportunity. Or people have actually responded to my past emails and said, you're a fool. This is a $1 billion opportunity. And all I can imagine is that you just burnt a bridge, right?
Yeah.
We invest in companies that we pass in because our thinking evolves. In fact, of our portfolio today, we've got 25 companies in the portfolio. 4 of them are companies that I said no to the first time around that they came to me. In fact, one of them is a company I said no to 3 times. And then I said no. I said yes at the fourth try of that founder, because my thinking evolves, the company's product evolves, the company's founder evolves. Like you're always learning new things. There's always going to be a way to turn that no into a yes. But if you actually send me an email, a response that says you're a fool for passing, there's no way I'm ever going to give you that money ever again, right? Like so, that's just a very foolish thing to do.
Yeah.
So yeah, like again, like don't try and add FOMO. Don't try and give me like this is a $1 billion opportunity. You have to connect. And the third thing I say you shouldn't do as a startup founder is actually a lot of times you send emails and you think that the shorter the briefer the email, the better it is. That is true in general, but there's an ideal length, and the ideal length is not 2 sentences. It certainly is not 200, but there's somewhere in between. It's that 20 sentences thing that is probably the best thing to do. And what happens with a lot of companies, a lot of founders, is they actually veer towards one or the other, the 2 or the 200. My recommendation is find that ideal 20 sentence thing, which has just enough information to give me an overview of the business, but also just enough to tease out and to sort of hook, grab my attention, but also hook me enough to say, I want to learn more, right? That I think very few founders actually have that down to a science. And if I'm advising a founder, that's my advice to them is sort that out first, like figure out what is the right amount of information to give that is enough, but also not enough that the other person wants to learn more. So that's the other thing that I say you shouldn't do is don't give me a 2-line or a 200-line essay on why I should speak to you. The stuff that you should do, find an introduction. I mean, a lot of people, we don't do that. We've actually invested in 3 cold inbound deals in our portfolio, but most investors like introductions. So find connections, find introductions. This is where your network, as we were talking about earlier, will come in handy. Like find those introductions. Warm introduction will always go longer. Will always be better, I guess. And the other thing that you should always do is do some research. Like this, the number of times that you get an email that says, "Hey, Atin, like I would love to pitch you for this fintech startup that I'm building." I don't invest in fintech.
Yeah.
Right? Like, did you even spend like 2 minutes on my website or on my LinkedIn? Everywhere you go, you see I don't invest in fintech. I only invest in education and future work. It just do like a little bit of research goes a long way. Like it shows that you were thoughtful about it. It shows that you were deliberate about it, and that's really what you want to see from founders or pitching for money. Right?
Yeah. On the other side, especially from your accelerator days and now, I'm sure there have been lessons as an investor. Are there any things that you would say in terms of what's more important, business model or founders, or any lessons on companies that either didn't work out or companies you missed out on?
I know. I mean, first of all, it's all a work in progress. I mean, I've only been around as an investor for 7-8 years. Most investors start to get their first round of returns in like 12 years, right? So I've still got a couple of years before I can truly say that I've gone through one entire cycle of investment. But the stuff that I like, the way that I evaluate companies is usually a founder, product, and then like unit economics or business model, essentially the same. But that's how I always look at this. And so every time that I've had, I won't say regrets, but an opportunity that I'm not 100% satisfied, or an investment decision that I'm not 100% satisfied with, whether it was an invest or a pass decision, was when I sort of over-indexed on one of those three things. Like, did I really fall in love with the product and say, no, even though I have red flags about the founder, it's okay, I'll invest because I really like the product that they're building and I think there's a need for it. Bad choice. Or if I did the other way around, I passed on a company thinking that it doesn't have a great product, even though I love the founder, I'll pass. Bad choice, because usually a great founder will figure out a way to make a great product. So yeah, for me, like in that rubric of founder, product, business model, every time that I've fallen in love with one of those three and made a decision or not made a decision to invest or made a decision to not invest, I found myself less than satisfied with that decision. As I said, I won't say I regret it. I don't like to use the word regret with an investment decision because, like I said, you can always turn it around. But I wish I had made a different decision.
Yeah. I'm curious, with 25 portfolio companies, how do you keep up with them? And do you set a schedule for like a weekly meeting, and then how does it, like, because you want to make sure they're getting any guidance that they can from you, and you also want to make sure from your end that just that you're checking in on them.
Yeah. I mean, I am a very hands-on investor as it is. So for me, it is definitely very important to actually stay in touch with the founders. I do that in a couple of different ways. The first is like we do have a Slack channel where we actually have all of our founders and all of their employees. So actually our Slack, our 27B Slack is open to every single employee of every single portfolio company. And so we're always seeing conversations happening on that. People are reaching out to me, but they're also reaching out to each other, and we can see those in public channels. So that's always a good thing, just to keep those things connected, to keep those people connected. That's one way of me just gathering information. A second way is, yes, we do have regular check-ins. So I have a cadence of checking in with the founders, anything from weekly for some really early companies going through a particular phase to quarterly, which is for our most advanced company that sees A, B stage. I'm usually speaking to them once every quarter. So you do have some kind of a cadence with every single founder, and you're just trying to get as much information as you can about the company so that you can help, like you said. The whole idea is for us to be helpful in situations that like where they're not doing well. So we do have a cadence for that. The third thing is we at Transcribe, we actually do a lot of events. Every single week we have at least one event for the entire portfolio to get together. I've been doing that for the last 3 years, ever since I started the firm, and will continue doing that for as long as I can. The idea with these events is not only to be educational, so you're learning something as an attendee, as a founder who's attending, but you're also building relationships. I keep saying that over and over, but building relationships with other founders, and that kind of rapport within we call it the 27B fam, that kind of rapport within the fam is actually very helpful when you have a problem that you're facing. And so you can then just quickly ask this other person who is an expert in whatever, TikTok or an expert in business models or whatever. You already have that established rapport to actually ask them. So in any case, so we do these weekly events. And that for me is another touch point, because when I'm on those events, I see and hear the problems that these guys are facing over and over again, and at a much more frequent cadence than even sometimes my own like one-on-ones will be at. So like the Series B companies, they attend every single week. I'm hearing updates from them, like small snippets, yes, but I'm hearing what's happening in their business on a weekly basis rather than once every quarter. Right. And then the last thing I would say in terms of the investor gathering information, and this, the onus actually is on the founder, and I don't think enough founders do this well, is sending an update email. Sending a monthly update email. You always should have an update email, and it should be monthly. That's the right cadence. Quarterly is too less. And I mean, some companies do the weekly thing, which if you can pull off is great. Like one of our companies actually does a weekly update, which I absolutely love, like freaking love. It's just amazing. It's short, it's snippy, it's personal. There is enough business information. It's great. But very few people can pull that off. The monthly update is definitely something that every founder should incorporate into their process. You should always send a monthly update to your investors and make sure that it has a couple of things, like what are your goals for the next month? What did you achieve in the previous month? Goals not just from a business perspective, but also financial. Maybe you've got an ARR or MRR that you want to hit, like a number you want to class, and mention that. But also give financial updates in general. Like you can give a financial update that says, we made X amount of money last month or whatever, right? Make sure that you've got that kind of information. What's your burn rate? That's the one thing that people don't mention, because they think that it's too diabolical to share that kind of information with investors. But actually, that's the best piece of information you can share with their investors, is tell them how much runway you have. You never know what an investor will come up with as an idea to extend your runway or find you more money, whatever, right? Like, share that runway. So anyway, so yeah, like I'd say that monthly investor update is something that not all founders do, and I think it's a huge opportunity that they're missing.
Yeah. Obviously, all of your portfolio companies are like your own children, so it's hard to talk about just a couple. But are there a couple that you're really excited by what they're doing, and maybe for listeners that haven't heard about them might be interested in their services or what they're doing?
Yeah. I mean, you're right. It's very difficult to pick, and I'm not picking any, but I would imagine that anybody who's 18, 25 will probably find value in a couple of the companies that we've built in terms of the products that the companies that we've backed in terms of the products that they've built. So as an example, one is Active, AKTIV, Active Learning, or active.com is their domain if you actually look them up. They used to be called 101 EDU. They've built an in-class engagement product for university students to engage with professors. So essentially, it's like replacing those ABCD boxes that you have to buy sometimes when you're taking a course to answer questions from the professors. They're replacing that with an app that allows you to do a lot more detailed answering and question answer. What is really interesting about the product is not only is it for that engagement, but they've also built in open educational resources, OERs. They've actually got OpenStax, which is, if nobody's ever seen it, you definitely should look at. OpenStax is a nonprofit. They just provide textbooks for every single university subject that you can think of. It's just amazing. So Active has actually integrated all of the OpenStax materials on it. So if you're taking a Chem 101 class in your university, you can actually just use Active as the app to do not only in-class engagement with the professor, but also actually read on those concepts when you go back through this open source book, which you never have to pay for, essentially. So it's just an amazing product. But the thing that I find the most unique about Active, and this is one of those things that we've talked about earlier, which is business models, but try and understand what their business model is. Active has a very interesting business model. They actually don't sell to the institutions, so they don't sell to universities. And also they don't directly sell to customers, even though it's the students who pay for it. What they're doing is they're selling to the professors. So, and selling is the wrong word here, because essentially the professors are also not paying for it, so they're not selling. But what they're doing is they market themselves to the professors endorse the product and then add it as a requirement for their courses. And so for the professors, it's low friction because they don't have to pay for it and they don't have to ask their universities to pay for it. They're just passing on the cost to the student. So that business model works really, really well for them, for Active. And they've been able to build like 7-figure revenue off of that. It's just absolutely amazing.
Yeah, no, that's awesome. Can you talk about a little bit about, again, you talked about being young and your, this being your first venture fund and capital firm. But what is kind of your motivation, or what is 27V's motivation or hope for portfolio companies? Is it to get to a Series A, B, C level, or if someone's in the process of maybe talking to you and doesn't know your intentions as a lead investor or investor, kind of what is 27V's outlook on the company's future?
Yeah. I mean, I think there are two aspects to that. One is, what do I need from a business perspective? And second is, what do I need from a human perspective? Let's just call it. Business perspective, yes. Like, I think if you're raising money from me, we are in the venture capital game. And so if you raise money from me at pre-seed, you have to go to a seed so that I can get a markup and get a return out of that. You have to go to a seed is A and B and C and so on and beyond. So I think that goes without saying that, yes, we would like you to keep raising capital as an investor. As a human being, like, when I invest in companies, I mean, what gives me the most pleasure is when I see the founders actually just upskill themselves, just evolve and iterate on themselves. And we've had so many of those examples. Like, we've invested in companies that were at pre-seed and are now at Series B. And like, I've seen the founder grow from, I don't know what a cap table is, to now actually thinking, how do I build a 100-person team? Right? Like, that kind of knowledge building in such a small period of time. Like, I mean, the founder that I'm thinking of, as I'm saying this, I've seen that happen in the last 3 years for her. Right? To have that kind of evolution is just absolutely amazing. And it just gives me like great joy to see that. Like, to know that we backed this founder when that person had like $0 in their bank account. Like, we were able to enable this to happen. Right?
Yeah. Maybe two final personal questions before we end.
Sure.
The first is, I saw you got into ultra marathon trail running and have finished a couple of 100K races. How did you get into that? And how did you build up, your body to be able to run those lengths and distances?
Yeah. How I got into that, I was having a really bad time at work, just not feeling very accomplished and feeling very stuck, and just figured that the best way to do that would be to get into some kind of intense physical activity. And I always loved hiking, so I figured that the best thing I could do is basically, find a combination of that. And so just sort of fell into the world of trail running. Very early on, figured that you could either be fast or you could run long. I was never going to be fast, and so I just decided that I'd run long distances. So that's how I got into ultramarathon trail running. How I got my body, I mean, honestly, I'm not fit right now, but I think I learned a lot about discipline and the human mind, I guess, from that experience. One is, you could really cheat your mind. You can, like, just believe it. You can cheat yourself, and you have to sometimes, especially when you're down in the dumps. You have to cheat yourself to say, no, everything's fine. And that sometimes lifts your spirit so much that you are able to actually overcome that. And I see that every single day when I'm going through my training. And then the second thing was just discipline. I think, like, doing the same thing over and over again and doing it at a consistent schedule, at pacing. You don't enjoy every day. Some days are really, really, really bad. But the fact that you got out, that gives you more joy than the actual workout, right? Like, just the fact that you were, despite just not really feeling like it, you actually did get out and and complete the workout, that makes you feel really good. And that's what matters in the end, just doing the same thing over and over again, with a goal in mind. That discipline, it comes in super handy. And I've seen both of those things apply like to my business, my day-to-day life, my personal life also. They've been super helpful.
Yeah. And then the last one, last year you became a father. Any advice to future first-time fathers? And, just talk about how fatherhood has changed your life.
I mean, I think I'm still trying to sort of assimilate all the lessons. Honestly, he's only 9 months old yet. So we're still trying to learn how to be parents, frankly. But I think specifically to fathers, I guess the only thing I would say is, learn how to change a diaper. Like, honestly, I think the first 3 months, or at least the first 2 months, like I changed every single diaper for my son. And it may not sound like a huge thing, but that was just one less thing for my wife to think about, because she had all of this other pressure of keeping this little one alive in many other ways. And so just to be able to take that one thing off her plate and just know that she wouldn't have to worry about it, I think I would imagine was a boost for her. And so that's my recommendation to any new fathers: just figure out how to change a diaper and just take ownership of that. Any small pieces that you can take ownership of, right? Like really anything that you can take off the plate of the mother, who's obviously going through a much tougher time than you ever will. I think that's just helpful. That's productive.
Yeah. Well, Atin, thank you so much for taking the time with us. Is there anything else that you wanted to pass on from your school of knowledge, or anything we didn't cover that you wish we had talked about?
No, not at all. I think we covered most of the topics. I'm all out of advice now. But if anyone did have any questions, feel free to reach out. I'm on Twitter, just my last name, first name, @Batra. Then send me an email. I'm just my first name @27v.vc. I'm happy to engage with anyone that would like some support.
Yeah. Well, Atin, I just want to acknowledge you. It was really cool getting to understand your journey, both professional and personal, and just a lot of the advice that you said is really valuable in terms of, even for an entrepreneur, maybe trying it on the side for 6 months or something like that before, to really get a feel for it before going full time. And just, all the advice for pitching and pitching VCs from an entrepreneurial perspective, all of that was really, really helpful. So thank you for your time and your knowledge.
No, my pleasure.